Hey, this is Joe and Jared from the Anchor Point Group and Premier Plus Realty. Today with Sean from Fairview Lending, one of our preferred vendors here in the local area for our mortgage lending options. We're going to talk a little bit more today about our current state of the market with regards to lending. And Sean, tell us a little bit about yourself, who you are, how long you've been in the business.
Awesome. Well, welcome, guys. And thanks for recording, having me on the video today.
Absolutely.
My name's Sean Wilkins. I'm a loan officer with Fairview Lending. I've been in the business since 2019. I've been in sales and finance for about the last 20 years or so. I'm from originally right outside of Philadelphia in South Jersey. But I've been down here about 22 years now.
So hold that against you. Sorry about that.
I know you guys are Pats fans, and I apologize for that as well. But yeah, I've been in the mortgage business. I work for an independent mortgage brokerage, Fairview Lending. So we are, what we do is we're not just tied to one particular lender. We have a client, we can shop for the best rates, best terms,
Sure.
or just a loan product that fits their needs. Not everybody has, the right tax returns. They might want to look at bank statements, alternate docs type of stuff. So we can do it all.
Awesome, that's great.
Yeah, and I put Sean to the test on a couple, and he came through with flying colors, and that's why he's on our preferred vendor list. He's phenomenal.
It's always great working with you and your team as well.
That's awesome. So I'd like to start this off with just like what's going on today in the current market. Right now we're in, what's today's date? October
3rd.
October 3rd, 2025. We just had a government shutdown, so that's probably on everybody's mind this very moment. So why don't you tell us a little bit how that affects our buyers that are currently under contract, and then also people who are thinking about wanting to put in an offer on a property. How does that impact them?
Great question. So there's a couple different impacts the government shutdown is having on mortgage lending, and being able to close and all that type of stuff. The main thing is flood insurance. Okay. So the National Flood Insurance Program is implemented and administered by FEMA. FEMA's not open right now. So if you can get a flood quote, and an insurance agent get you a flood quote, but getting a policy bound is impossible right now. So what a lot of people who are currently under contract, they just went under contract in the last week or two. They were shopping for insurance policies. They don't have it bound yet. Those people are going to be in a little bit of a situation where they might have to ask the seller for contract extensions. Mm-hmm. If the rate is already locked, they might incur some fees due to rate lock extensions. Because that's not free.
It's outside of their control.
Yeah, even though it's outside of their control. And we saw some of that with some hurricanes that came through. I remember when Ian came through, I was driving down to Bella Terra at my colleague's home to use his internet because Cape Coral was, pretty messed up. And I had some closings going on that week, and it's the title office is under a foot of water, and the lenders we still had to extend the rate, and there was still a cost associated.
I'm curious what happens if we're still hurricane season's almost behind us. But curious what would happen if hurricane happens and a house floods during the government shutdown.
If the house floods during that's a good question. Obviously, we're not closing. I mean, that's for sure. But yeah, there would probably have to be, if there was already an appraisal, a reappraisal once the repairs are done, all that type of stuff. And that's, to circle back to kind of your original question, that's where having a loan officer and a realty team that know what they're doing to guide you through, crazy messed up situations that can occur, that can definitely be a huge asset to have.
Awesome.
The other effect that the government shutdown will have, it's a little bit less drastic, I'd say, but on the front end, you were asking if you're, hey, you just got pre-approved or you're in the process of getting pre-approved. FHA, so FHA assigns a case number when you're buying a home. So I'm under contract on 1234 Main Street. We're going to order the appraisal. Well, the FHA assigns a case number to that before the appraisal can take place. Those can be delayed, if not shut off completely. And then lastly, VA certificate of eligibilities. If you're doing a VA loan, there's a form we pull for that borrower that shows they're eligible for the VA loan. They don't have another VA loan that's going to cause an issue, and those can also be delayed by the government shutdown.
So we all know it's going to open back up. It's a matter of when. So once this all happens, there's going to be a lot of applications that are going to have to be processed at once. Yeah. Do you see this as a backlog for when things go back to normal? If you're closing after you know, after it opens back up, are you going to be waiting a lot longer than you normally would have, or do you think that's a non-issue?
So on the pre-approval side, that there's other ways I can determine. I mean, like I'm not going to hold up a deal on the FHA case number because it just might be, hey, we can't order the appraisal in the first week. Might be a second week type of scenario. Worst case scenario, as a loan officer, I know that if I'm in the middle of a government shutdown and I'm dealing with one of those issues, I'm not locking the rate right now. I'm communicating with the realtor and the seller side, saying, hey, here's the situation. Yeah. The realtors are going to negotiate any extensions that could be needed. And you guys are the market experts, but I'm assuming that a seller's not going to be super anxious to take their home back out of a contract. If they've got one under contract. So there's ways that we, as professionals, can work it all out. And that's what you guys are good at as well.
It was just yesterday, the day before, the news was making a big deal, and I think rates went up again. It went from 6.3 to 6.34. It's not going to really make or break a deal, I don't think.
Right.
I mean, that's a great segue into rates and the current state of what rates are at. When the Fed met a couple weeks ago, there was a quick dive down into the low sixes, about 6.16 I saw, and now it's trickled back up another almost quarter of a point. I'm guessing because the Fed only went down a quarter of a point versus a full half of which everybody was predicting. Now we all know that mortgage rates aren't directly tied to the Federal Reserve, but they do somewhat mirror each other. So Absolutely. Can you tell us a little bit more about what your thoughts are with that and what we're thinking of seeing in the next 6-12 months?
Absolutely. Let me start out by saying I don't have a crystal ball.
Nobody does.
So,
I wish you did.
And I tend to be a little bit more on the optimistic side because in the mortgage business, you want rates to do better and you want rates to go down. Sure. Same thing for you. We want our buyers to get a better deal, all that kind of stuff. So I don't think it's too much wishful thinking, but here's kind of my take on it. You're absolutely right. The Fed does not directly correspond to what mortgage rates are. In the weeks prior to the Fed rate cut, there was pretty much, it got to about 95-100% consensus that there was going to be a 25 basis cut with about a 10, and they actually give you the odds, of what's going to happen. They were figuring a 10 to 15
Any way you can gamble, they'll do it.
Absolutely, and I'm for that for the record. But there was maybe a 10 to 15% chance of a 50 basis point rate cut, right? So they knew the Fed was going to cut rates. Yeah. They knew it was probably 25 basis point rate cut. So when the Fed came out and cut rates by 25 basis points, it was kind of as expected, right? Yeah. And then what really tells the tale is in the comments. So when the chairman gets up there and he talks about the outlook and what they want to see, and they give a forecast for how many rate cuts they think are going to occur the rest of this year and into next year, that's what will make rates adjust from that point. Okay. So on the day of the Fed rate cut, rates had already been trending down because they anticipated a 25 basis point rate cut. When the Chairman Powell went up there and he said stuff that could be perceived as somewhat more pessimistic than they were hoping to hear, then the markets reacted and that made mortgage rates actually go up that day. Yeah. So it seems real counterintuitive. Oh, there's a rate cut, and then my mortgage rate, if I locked yesterday, I would have got a better rate. But it's based on what they perceive to be the future. And another good segue into what we think is going to happen. I think rates as a whole are going to continue to trend down. It might be a little situation where you're on an escalator going down, you're playing with a yo-yo. You'll see day-to-day jumps up, but the overall, it's going to be going down. And I base that on a couple things. Inflation reports have been coming in as expected or lower for the most part. There's a hot one here or there. That's what the Fed's looking for to cut rates. They want to make sure inflation is not increasing and it's actually decreasing or at least holding steady. The other thing the Fed's looking at is labor. So they're going to look for jobs reports. And if there's really strong jobs reports, then the Fed says, well, maybe my rate policy is not too restrictive. I'm not adversely affecting the economy by higher rates, and now I can just focus more on the inflation. So that's when you'll see, rates. If you get a good jobs report, you'll actually see mortgage rates go up that day because then the Fed's less inclined to cut rates.
Which is so amazing to me because just because you have a job doesn't mean that you're getting paid enough money to actually live and sustain the life that you want to live. 100%. You're just making money. So it's
and there's so many things. I mean, look at how many times they revise those jobs reports, and how many is it? Hey, like you said, I just got my first job at Walmart or whatever it is. That's not going to equip someone to buy a house, and yet rates are adjusted for it.
And to that point, down in Florida, there is, I think, a desperate need for the price of employment to go up in this area. I don't think it has made the same transition as the rest of the state for, cost of living, which I think is gonna be coming. And then, we're talking about with regards to, the possibility of next November having no property tax actually being a thing.
Yeah.
Which is amazing. This is like mythical creature, unicorn, a liger over here.
Yeah.
Like they're actually thinking about that if we had 60% of people devote that they don't want property tax as a fully vested homeowner in Florida, which means 6 months in a day, you might have no property tax anymore.
And think about how huge that's going to be for not only people that own their home and don't feel that they should have to rent it back from the government every year, which that's completely understandable in my opinion. But just the guy trying to get into the market, now I don't have to count that your monthly property tax, which, as you guys know, depending on what market you're in, a $300 and some thousand house, you're looking at $300-400 a month in property taxes.
Yeah, absolutely.
And if that is not factored into your approval debt to income ratio, you can afford more house. Your monthly payment's going to be way lower. And it does encourage home ownership, which is the quickest way people build wealth.
100%. And then you couple that with the fact that and you can agree or disagree with me. I'd love to know what your thoughts on this is what would your advice be to a potential person on the sidelines thinking about buying? My advice is, hey, listen, if we're going to have rate cuts and we're going to possibly lose property tax, that you should probably come off the sidelines sooner rather than later to capitalize on a buyer's market that we're in right now. And because I'm predicting similar things of 2022 down here in Florida specifically when all this stuff comes to light. What are your thoughts on that?
I think the market we're in right now is kind of a perfect storm of why it's a good time to buy. You've got rates declining. You've got home values that have declined a little bit. However, when rates continue to decline, it's going to put more buyers back in the market. If the property tax proposal goes through, you're going to have way more buyers in the market, and then you guys know what happens then.
It's a perfect storm of not having enough houses on the market for the amount of inventory, for the amount of people that we have coming off.
Exactly right. Every deal's 9 cash offers, and the guy that's trying to finance is on his 4th or 5th offer he's making to try and get under contract.
Absolutely.
But if you jump in now, you're taking advantage of the fact that prices haven't started to go back up yet. And you can even rates are lower than they were for the past 2 years, and even if that continues, which we hope it does, and so do you can always, take advantage of the lower rate in the future. Well, I say you can always, you still have to qualify for a refinance, but, you can get the house now at the price it is and get the lower rate down the road.
And that's a question actually I wanted to ask, because rates have come down considerably since last year.
Mm-hmm.
So have you been noticing any refinances? Have you seen a tick in refinances?
I'm working on, yes, this past 2 or 3 months, refinances are back in the picture for the mortgage business, and what makes that really a profound statement is for the past 2.5-3 years they have not been.
Right.
Yeah.
I mean,
why would you?
Yeah. Everybody that bought when rates were 2, 3, 4, 5% is not moving out of that home when rates are 7 or 8 percent. Yeah. And then everybody that bought at 7 when it was up and high, it got as high as almost 8%.
Yeah.
It hit 8% a day or two about 2 years ago, might be 3 years ago now, Halloween, and so those people are saying 6, rates in the low 6s, and so we're starting to do some refinance.
What do you think is the sweet spot? Like, if you were gonna be like, this is where the market is really beneficial to banks, beneficial to homeowners, possible homeowners. My thought is high 4s, low 5s is kind of that sweet spot, because we have all the people all the time are like, back in my day I had an 18% mortgage rate. I'm like, yeah, but the cost of your house was 1 year's worth of your income.
Right.
So
right.
What do you think is let me rephrase it. What do you think is the new version of 18% right now? And then what do you think it should really be at for beneficial for both sides?
I think if you're in a home that you bought in the last 2 years and you're over 7, you're looking at refi. Now, to answer your other question, the sweet spot, I think it's pretty clear, even in the most optimistic scenario, we're not going to be back into the 1.75s, 2.25s. Those aren't coming back. But, 4s, that's where I think that's as good as it's going to get, and I think that would be a really great number, both for buyers, but for the market as well, and the banks, and everybody can, make money. And you're not you can afford much more house. I could bore you with the math, but the amount you're pre-qualified at a 4% interest rate versus a 7% interest rate is drastically different. So the interest rate does have a big effect on how much house you can afford. So that's going to enable buyers to afford, once rates are back into the fours, they can afford the home they're looking for.
Yeah, but to that point, I mean, it's a somewhat of a double-edged sword, because at the same time, if you are getting 4, the inventory that we have right now is going to quickly dissipate, and then the values are going to go sky high too.
No, and that's what I'm saying. Like,
That's
as far
why
as
we're almost in that perfect storm right now.
You buy, there's been an adage for a while now, and I think it rings true now more than ever. Marry the house and date the rate.
Yeah.
Right.
Yeah.
You can buy the house at the price. You can't get if you wait for the interest rate to go down a point, but the house is 50, 60 grand more, you're not saving any money.
No.
You're not saving any money. If you buy the house when it's 50, 60, 20 grand less than what it's going to be, you can always fix the interest rate down the road.
Yeah.
You cannot do the reverse.
That's what I say all the time. Like, you can always refi the mortgage. You can never refi the value of the house
Right.
once you paid for it.
Right, exactly
So
right.
absolutely 100%. And that's why I keep on we saying to our buyers, like, listen, do you want to be competing, or do you want to have your pick and choice of your houses right now?
Mhm.
And so, I mean, I'm glad that you agree with all those things.
I think you guys had the nail right on the head.
Well, Sean, I appreciate you taking the time today to go through that with us. As always, we're the Anchor Point Group with Premier Plus Realty. Sean with Fairview Lending. You'll see all the links below to Sean and ourselves as well. If you have any more questions with regards to this, feel free to reach out to all 3 of us. We'd love to help you out. So thanks for watching along.